Bloomberg Audio Studios. Podcasts, radio, news.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Thank you, everyone. This concludes our press conference. Thank you for the time.
All right, that was a press briefing from One Police Plaza in Lower Manhattan. Police Commissioner Jessica Tisch, Chief of Department Jeffrey Madre, and Chief of Detective Joseph Kenny providing an update regarding the homicide in midtown Manhattan of the UnitedHealth executive. Let's get some more reporting on this with Myles Miller. He's managing editor for Bloomberg News. Myles, anything in that press conference strike you as of note here? It's still obviously very, very early in the investigation.
Yeah, this is a really interesting investigation. They have a suspect who is able to flee on a city bike after shooting an executive in midtown Manhattan in full view of plenty of people. Midtown Manhattan, of course, flooded with people around the time this happened, just before 7 o'clock in the morning. It's very striking that Brian Thompson, a CEO of a company that is currently trading at about $613 a share, with no executive protection, walking from his hotel into Investor Day with no executive protection, and he's able to be shot by a person who was able to flee into New York City traffic at the height of rush hour.
So, Myles, you have extensive work, having worked with the NYPD when you worked in local news. You also led communication strategy for the FDNY. Tell me about the process inside the NYPD when something like this happens.
Yeah, so the first thing that the NYPD did was search Argus cameras. So that is the NYPD's network of cameras throughout Manhattan. And from those cameras, they were able to pull that photo of the suspect standing in a shooter's stance and aiming at the executive, at Brian Thompson. So that's the first step. The second step is going to be working with those partners like City Bike to figure out where bike wound up going, number one. Number two, to figure out where that suspect is, and then also trying to trace every step. They put all of these videos that they take of the suspect from the moment it happened till him getting to Central Park. They put it together on an app called Pattenizer, and they're able to figure out just exactly where that person wound up and how to continue doing the investigation. So the investigation will focus on where he is, and then also they're doing that search warrant in Brian Thompson's hotel room. They'll try to figure out if there was anything there that can lead them to what may have happened here.
All right, Myles, thank you so much for that. We appreciate your reporting. Myles Miller, managing editor for Bloomberg News, and this unfolding story, extraordinary, fluid, very early stages. But we did get some comments from leadership of the NYPD that, again, they are working all angles, as you can imagine. Right,
and UnitedHealth Group obviously has many different subsidiaries, and Brian Thompson was the CEO of one of them. So he was the CEO of UnitedHealth. They also have financial services. They have a Medicare division, community division, and employer division. So he headed one of those divisions for the overall UnitedHealth Group, and Bloomberg News will be keeping you updated on any headlines as they cross. And we heard also that the tree lighting ceremony today, the whole event starts at 7 p.m., and that will go on as expected with a much heavier police presence as well as ununiformed detectives.
Yeah, I mean, I think one thing New York has shown over and over again is the resilience of the city and its people, and we move on, as most folks try to do as well.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Let's check in with Steve Miller. He's the chair of the ISM Services PMI. Steve, thanks so much for joining us here. I'm looking at the ISM Services Index. Came in at 52.1. The consensus was 55.7 here. What are we seeing on the services side of the U.S. economy here?
No, I think this month's number is a solid number. It's on trend. If you look past the last 2 months, in a couple of interviews that I was in over the last 2 months, I mentioned just as likely those blips in new orders and business activity, as well as supplier deliveries, could have been the result of the port strike, people getting ready, risk management around port strike and hurricanes. and those seem to be off trend. This one seems to be right on trend and continues to reinforce that slow to moderate growth in the services sector.
So the market is taking a little bit of a different view. If I just look at the front end of the yield curve, you're seeing a bid into the bond market yields a little lower. The dollar is dropping, and the S&P is off its highs. And I say that because it seems like the market is taking it as more weakness.
Okay.
Is that how you're describing it? Like continued weaker services grinding lower, or some sort of like, yeah, it's fine?
I think for the next 6 months, to me, it looks fine. It's on a trend of about 52%. Which is a solid number, although lower than it's been in previous years. I think more the concern is when you look at the summertime, which in non-COVID years has been anywhere from 0.5 percentage point up to 6 percentage points down from where it is in the September to November timeframe. So I think in the near term it looks solid. I'd be, there's so many variables out there around tariffs and interest rate changes and that type of thing, Fed rate changes. I think I think the summertime is more the question mark.
All right, Steve, thank you so much for that. Steve Miller, he's the chairman of ISM. That's the Institute for Supply Management, on Zoom from Aledo, Texas. How about that?
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Salesforce.com, big tech company, reporting big earnings last night. Stock up 9.5% today, hitting an all-time high. Market cap just below $350 billion, one of the real winners here. Stock's up 38% year to date. Let's break down some of those numbers. Anurag Rana joins us. The freshly shaved Anurag Rana, thank goodness, shaved that thing off. Technology analyst of Bloomberg Intelligence.
I don't recognize him. I don't recognize him.
He looks like a professional now. Makes him years younger. From that tech hub of Chicago, Illinois. Anurag, talk to us about Salesforce.com. They seem to have really put up some good numbers. What is the street like about it?
I think when you really peel the numbers on sales and backlog, they were pretty much in line. But I think what is really happening, and something that we highlighted during a preview and some notes that we wrote, earlier in October, they released a new product called Agentforce, which is truly their AI product. Now, that's not going to drive revenue over the next 12 months, but it really changes the shape of the company and where the direction it's going in. And I think that's what investors are buying in right now, along with their steady margin expansion. Margins were so good yesterday. That has been a big story for them as well. So I think on all fronts, they're doing well. And as I said, the sales growth is not going to show up near term, but I think they have a clear strategy how they're going to play this game.
So to this point, if Salesforce is doing this well without Agentforce materially contributing to its bottom line, what kind of upside do we really have, and when do they reach sort of full tilt on that?
Yeah, I think I would agree with you on that, because people are buying into that without seeing the results, and I think this is truly what we have seen a lot in the software space is people really figure out which are the companies that will benefit in the long run. And a lot of that, you could say, value realization happens sooner, when the revenue realization is. So perhaps down the road, there'll be a time when the software space may not see a valuation uptake, but the sales growth will go up. But, one of the things you have to think about it from a Salesforce point of view, they have two really critical products. One is sales automation for salespeople, and the other is customer service products for customer service people. And in enterprises, AI is the biggest beneficiary to those customer service people. Chatbots, AI agents. We recently did a conference, and when we asked the question as to how many people use chatbots, it's still less than 20% at this point. So that is the direction where the world is going in terms of working with retailers, working with airlines, and these guys are right in the middle of it.
All right. So what's getting the market all excited here? This AI product. What is their AI product, and what is it supposed to do? Because I actually moderated a panel with the Salesforce executive, and I forgot everything he told me.
So think about it. I actually have a very interesting demonstration. If you go to YouTube and look at their Dreamforce demo, it was actually pretty interesting because they did Saks Fifth Avenue. So think about it this way, Paul. You buy, the presenter bought a jacket from Saks Fifth Avenue, didn't like the size or something, just went to the chatbot and say, can you find me a different size? And the chatbot basically took care of everything, basically knew what size this person was able to return the jacket, send another one to this person's address. Or that matter, if it wasn't available, you could go to the store and pick it up without the intervention of a human. That level of sophistication coming into a chatbot so quick in the game, I think is really what people are getting excited about.
And put some numbers on that. Like, how much is that going to do for them in terms of revenue, and how much do they charge for like that chatbot? So say like that chatbot works for me for 2 minutes. What's the translation of money?
So the pricing starts at $2 per conversation. Now the question is, well, what does that mean? So when you look at, a person calling AT&T or Verizon, that call could cost as much as $10, $15. If it's a quasi mix of an automated chatbot and a customer service person, that call could be $7 or $8 per conversation. Salesforce is pricing at $2 or so. So it will force companies to fix their customer service, because think about it. If you're an insurance company, if you are a phone company, that's really a very large portion of your cost. Amazon's already doing so much of that in the chatbot. If you are used to returning things on Amazon through their chatbot, it's actually pretty impressive right now, but it is still rule-based, which is if it can only do so much based on the data that's available, it doesn't take you to the next level. And this is what Salesforce is saying is the direction of that is that the agent or the chatbot is able to execute a transaction for you without getting a human involved in it, which is refund the money for you, return your things, give you an alternative of whatever you were doing before without any person getting in, and that really saves costs.
All right, so this company's got like 39-40% EBITDA margin. Pretty much all of that goes down to the free cash flow line. What do they do with their cash?
Right now, they're buying back shares. I'm sorry, Paul, but that's exactly what most software companies do when they have it. Now, think about it this way. Just 1.5, 2 years ago, this was almost 10 percentage points lower because they were spending even more on sales and marketing. The big story for Salesforce in the last 1.5 years has been a real improvement in margins. And as of today, compared to, let's say, March of 2023, it's up 10 percentage points. That's big if you look at from any financial metric.
All right, Anurag, really appreciate it. Really good stuff. If you can be a chatbot that can actually do something that when I call Citibank doesn't take me an hour, I'm game. I'm down for that. All right, Anurag Rana, Bloomberg Intelligence technology analyst, joining us.
It has not worked for me yet.
No, it hasn't worked for me.
When you call for customer service, it freaks me out when I don't get a live person.
Yeah, and I keep saying my name, and they're like, I don't understand you. Please talk to a real, but goodbye.
Well, that's understandable.
Yeah.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
We love talking about commercial real estate all around this country because it's such a dynamic business and it's undergone a tremendous amount of change, particularly resulting from the pandemic as this industry tries to continue its recovery and reinvention. And we love talking to some good, smart people about that. We got that today. Liz Hart, she's over at Newmark. She's the president of Leasing for North America, and that's U.S. and Canada. Abigail Doolittle joins us, too. She's our market correspondent in our Bloomberg Interactive Broker studio. So, Liz, let's step back, and as we think about the last few years, been very difficult for certain parts of commercial real estate, not all, but certainly like office, for example. I know as you, as an industry, are always looking forward. What's the view forward for commercial real estate in this country?
We really see 2025 as the year that real estate gets redefined. We're 5 years post the pandemic.
Yep.
We're putting that all behind us now. People have experimented with different ways to view commercial real estate, and now it's really about setting the value and creating the value going forward. So across key urban markets, particularly New York and San Francisco, we're seeing demand that we haven't seen in 5 years, which is a really good thing to see because that demand will start to create future value in those assets.
What kind of demand? What are you hearing?
In terms of demand, I think the most active segments of the market are still financial services across the country. Also, technology has a very strong and growing portion of demand. So we're seeing both of that.
So relative to Newmark, let's back up for a moment. Publicly traded company, one of the top real estate advisory firms in the country. Lots of different businesses. What's the main business? And in terms of this thesis about 2025 being the reset, what are the data points that you're seeing?
Well, we've certainly created a purposeful kit of different parts that will come together to drive our business forward. So we're number one in capital markets across the country. As you're looking at what's going to happen in the debt markets and what's happening with the debt that will be maturing in the next year, there will be an onslaught of capital markets activity that'll happen across the country, and that will really reset the value. And that mixed with tenant demand is what's going to drive the business forward. So we think the services business is going to have really spectacular years in 25 and 26.
So in terms of being the top capital markets, that means you're actually doing these financings, because we keep hearing and talking about this, let's call it $1 trillion to $1.5 trillion wall of maturities coming, but there's been some extend and pretend.
Yep.
So you'll be very much involved in that activity?
Yes, we have an incredibly active debt market team right now, and they've traded $1 billion just in office to resi conversions alone in the last couple of months. So we're seeing that turn on. So where last year it was a lot of, hey, what are we going to do next? It's starting to hit trades and then actually move forward. And we think that that's really optimistic for the year ahead.
Where the part within commercial real estate, where's the growth? Where's the opportunity? Because I still feel like in office, I'm not sure if maybe we're starting to form a bottom, but we haven't seen a ton of activity. But I know there are other parts that are working.
Yeah, I mean, I think the opportunity is, trophy's been talked about a lot, so we know there's opportunity in trophy. But right below that, there's a category that's being repositioned right now towards having more amenities and being better space. That definitely is a segment of the market that we think there's a lot of opportunity, particularly in places like Seattle, San Francisco, Boston, where you do see the demand picking up at such a large level. So that would be one category. We also see a lot of opportunity in office to resi conversion that can happen. We're tracking probably about 2% of the market could be converted, and 2% sounds like a lot, and I'm a leasing broker, so you're probably wondering, why is a leasing broker advocating for an office to resi conversion? But when you have 20% of availability across the entire market, there's still a lot of space that companies can transact on from an office perspective, but we have 4 to 7 million homes that are missing in America. And so if we can take that real estate and reposition it, I think that's really an exciting part of what we would see in 25. But it's unlikely to happen without the assistance of tax abatements, government interference, and really pushing this forward. Like, we're going to have to do this together.
Well, I was going to say, I've heard that the convergence there isn't as easy as it may sound, that it's a lot more complicated, particularly like windows and like central air and like moving walls and stuff.
It's physically very complicated, which is why you don't see it happening on even a larger part. But what's interesting is we started tinkering this more and more post-pandemic, and there's some very notable projects that will set the blueprint going forward that are delivering this year, including 25 Water in New York City. So we really see this as being something that will pick up.
As our markets correspondent, also with this real estate beat, I, of course, took a look at Newmark Stark, because we don't talk to a lot of real estate folks who are around publicly trading companies, or at least that's not something that I've done in my coverage so far over the last year and a half. But it's really interesting. So you went public in 2017, then up, and then down, and then up, and then down about 65% on the real estate downturn, but then up almost 200% off of that bottom into today. Still a little bit below your record high, but it tells me that some of those smart investors out there are seeing something similar to what you're talking about in 2025 being redefined. Do you have a sense for why people are gobbling up your stock like this?
Yeah, I mean, I think that there's certainly a sentiment in the market that the markets are improving, but also Newmark has a very big strategy focused on top talent, and that's something that's very differentiated from a lot of our peers. So with AI and all the changes that are happening, we're still doubling down and investing in the downturn and top talent, and I think that's incredibly important as we recover, because fundamentally those people are the ones that are making the decisions about how to reprice and how to think about what the value creation is going forward. We really know how to create alpha for our clients, and I think that's what we're seeing people be attracted to in our stock.
Let's say I'm out in middle America, I'm a developer, I want to put up a multi-family whatever. Is my bank going to lend me the money? Where am I going to get the capital for that these days?
It depends on the situation. So it's obviously very unique on every single asset, but we are seeing debt and equity enter the market again, because now that we have enough data points to know where the market is, people know how to price things, right? I think the uncertainty of yesterday is now behind us, and it's really about moving forward. That doesn't mean every project will pencil. It doesn't mean that every project will be at the same value that it was before. It just means there's an opportunity to move forward and create the next chapter.
Where are the problem points still?
I mean, the debt that's maturing is still the problem point, because that's when the value is changing. And so there's this really interesting mix, and I can give a specific, example from a building actually in San Francisco where the debt was just too high. It was too high for anyone to do a transaction. But there was a willing tenant willing to take 100,000 square feet in a building that they loved, right? Everything else worked, but the capital structure below just didn't support it. I think, there was a little bit of a standoff, and you can see that standoff being something that was really present in 23 and 24 because there was no way to move forward. But now I think people have realized, we are where we are, so we've got to move. And I think we'll start seeing some of those become more liquid in the market, and people just realizing, yesterday's value is gone and I've got to move forward because I'm not able to meet the demand in the market today.
So with that standoff, if we use that example, who caved? How does that resolve?
In that situation, actually, interestingly enough, neither caved, and the tenant went somewhere else and created the value for someone else, right? And then I guess there's this saying in commercial real estate that the best amenity is a well-capitalized landlord. And, that's probably going to continue to be true in 25, 26, and for the next several years as this readjustment happens. But the fact that the demand is in the market does mean there's a lot of opportunity.
Are we seeing equity people come in and say, at this value, I'm ready to put in equity into this building, and lender, we're going to have to work something out, and the lender's willing to work something out? Because, because the lender at the end of the day will have to take a haircut. The original equity people are going to take a haircut. But if fresh equity is ready to come in, because I would guess there's a lot of smart money out there that says, boy, 50% markdown, I'm in.
There's a lot of smart money out there, and a lot of it is coming in places like San Francisco would be a great example of that, right? Where you can trade down and get something that will go for the next generation to create value.
So this is certainly a news-heavy cycle and year. President-elect Trump going to be taking office in January. What's the effect? I've been dying to know. What's the effect going to be on real estate? If rates go higher but less regulation, what is the buzz out there?
Yeah, I think commercial real estate largely sees Trump as being pro-growth, as many people do. And so that's a positive for our industry. But I think for commercial real estate, what also matters in addition to the national election is what's happening at the local level. So seeing half of the urban mayors switch in the last election cycle, seeing people like Daniel Lurie who are pro-business, pro-safety, pro-transportation coming into office, that's really what starts to turn our cities on.
Regulation-wise, there are some that said that in this election year that the regulation on regional banks was relatively lax because of the presidential cycle, but that it could come on. Do you see any problems with the regional banks in the coming year? Any kind of a crisis of sorts similar to the Silicon Valley situation last year?
I think that the large crisis point is behind us because now people are willing to realize that the values have changed and that we're moving forward. But certainly there could be some bumpiness in the next 24 months.
You just moved to New York City.
I did.
From San Francisco.
I did.
Give us the expert view on just San Francisco. I mean, where are we? Has it bottomed? Is it coming back? What's driving it? What's good? What's bad?
I would say never bet against San Francisco. It's a very resilient economy. It has been since the gold rush, as you know. It is coming back. I think if you look at Market Street's the big thoroughfare in San Francisco. 2 years ago, everyone said Market Street's dead. It's never coming back. Write it off. Well, what's happened in the last 12 months? One end, the city anchored it because they're coming back to the office 5 days a week. At the midpoint, Notion, which is a growing AI company, just took a very large lease from Brookfield, resetting that building to have increasing value. And on the other end, you have groups like BXP who are doing amazing work with the city of San Francisco to redo the plaza and make sure that it's safe for people who are coming and going from the downtown core right next to that rich transit of the ferry building coming and going. So you see these signs across. It's just a fill-in from there. And the streetscape still feels incredibly vibrant in San Francisco. So the other thing I really like right now is Daniel Lurie is calling leaders to participate in government, including people like Sam Altman who are on his transition team. But he's also also bringing back other businesses into San Francisco, making sure it's not just too reliant on the tech economy, but finance, legal, other sectors coming in and being vibrant in that city.
So speaking of San Francisco, Amy Price, president of BGO, joined us maybe about 2 months ago or so, and she's one of the well-known voices, people in the commercial real estate space. And she said that she believes this fourth quarter is the bottom. She called it definitively from her view in about 15 seconds or so. Do you agree?
Yes, I agree completely. She's right.
There you go.
Well, that was 15 seconds or less. We appreciate that. All right. Both, thank you very much. Really appreciate that. Liz Hart, Newmark, president of North America Leasing. We very much appreciate it. Definitely come back. Thanks so much, Abigail Doolittle, joining us from Bloomberg.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.